Hello, everyone, and a very warm welcome to today's major markets update for Wednesday, September the 27th, 2023. The last picture that I had for Friday's update showed that we were tracking a bearish impulse lower within a third wave / C wave. Bigger picture-wise, we also need to see 5 larger waves down from the July uptrend high. So far, we have not seen it. So bears, hold your horses, okay? Before you throw in the towel and say the end is near, it's not. We have not seen 5 waves lower, bigger picture-wise, from the July high. So far, only 3. And those 3 have not even completed yet. As you know, waves are fractal in nature, so this blue wave 3 is made up of 5 smaller waves as well. At best, the bears have most likely now completed the third wave of this third wave. Allow me to explain. And remember, I know we always want to know exactly everything beforehand. I can't state it often enough. We've been looking for 4270 for quite a while. Just because we have exceeded it doesn't mean our work is not valid. This is like a regular forecast for the weather. If the weather can forecast 2 weeks ahead of time that it will be raining on Tuesday, and we get rain on Monday or Wednesday, that's a pretty darn good forecast. Weather forecasts are about accurate 75% for 1 day out. Day 2, another 75% of 75%. Day 3, 75% of 75% of 75%. I'm not going to say that, therefore, my work is always correct. No, we have to take things into consideration. We start off with the anticipation, a CSA relationship. That is normal, 4270. When then the waves start to progress, we adjust accordingly. Then we say, well, we can go to as low as 4230. And in the meantime, we always have our alternatives on the table. One of them was up to last week, the triangle. Well, that one has been invalidated. And since then, we've only tracked the impulse low. Now, this impulse has been subdividing and extending. That can always happen. Impossible to know before. When we topped in July, we got the first 3/5 waves lower. Then we apply the CSA relationship to the B wave high, and that's where we start off with, and then we monitor it accordingly. And that's what we're currently doing. Because remember, we have 2 primary expectations. The first one is we top for this larger B wave, and we are now in this larger C wave lower to about a high 2700s, okay, on the S&P 500. But we haven't even completed the first wave of the C wave. C waves are 9 out of 10 times 5 waves. The other time, it is an ending diagonal, and they can be a little screwy, where you say, well, that doesn't even look like 5 waves because they're so overlapping. But regularly, 5 waves. We haven't even started the third wave of the C wave, if it is indeed the case, okay? So, therefore, bears, hold your horses, okay? Don't panic yet. Nothing out of the ordinary. The other thing is we were also tracking the potential for this green wave 4 to bottom. Can also be a red wave 4 or black wave 4, whatever label you want to give. But this 4th wave to bottom. Okay. Now, if this 4th wave should bottom, it may not go below 4185. Why? Below 4185, namely, we overlap with this wave 1. Then the odds really increase. This is not a 4th wave anymore. So as you can see here, the 61.8% retraces to 4274. Well, we've certainly exceeded it. So the wave count, as shown, is under pressure. Okay, but nothing out of the ordinary yet. 4th waves don't have to necessarily bottom here. Ideally, I would have liked to see it bottom at 4400, but we'll address. If we then go below, I would say 4100, then we have a top in place for this larger B wave. But we'll get there when we get there, okay? So let's go to the charts and start off with our initial wave count, the ABC lower. We had an original target of 4270. Today we got to as low as 4248. That doesn't mean this wave count is validated. Not at all. It simply means we have extended third waves and marginal or minimal fourth waves. So the extended third wave should have bottomed here. It did it. And then the fourth wave should have topped here. This orange, it didn't. All we got was just a one-day bounce. Then the extended third wave should have bottomed here. It didn't. It went even lower. But still, the pattern in itself remains valid. And we can still reach to about 4250 to about 4200. Okay, somewhere around there. We have slight positive divergence now on the RSI 5, so we could kick in this wave 4. This wave 4 should be a multi-day affair, just as this wave 2 was. Micro 2, as you can see here, was a one-day affair, so was Micro 4. Now, I would have liked to see Micro 4 go a little bit higher, based on this 23.6 to 38.2% retrace, which is typical for a fourth wave. We didn't even get that on the S&P 500. We didn't even get a CSA relationship within the fourth wave, as you know from the earlier updates this week. It happens. The market doesn't owe us anything. We simply start off with those retraces. All we knew was we had to go lower. We're still missing this wave 5. We're still missing this wave 5. We're still missing this wave 4. Okay, so on the hourly time frame, again, we have the CSA relationship 4270 has been exceeded. More so, at the high here earlier this week, this orange wave 4, a 5S1 relationship would have targeted nicely 4268. Well, we got to 4238. It decided to extend. We got a pretty good reaction. We have plenty of positive divergence, but remember, divergence is only divergence till it's not. It's a condition, it's not a trigger. Look here at all this positive divergence, and technically market only went lower. Well, we had this little spike high, but you can see what happened. Okay, so as long as we hold today's low, right, we can now move A, B, C higher. That is my preferred point of view. Why? Because on the 5-minute chart, this counts as one of the cleanest impulses I've seen in quite a while. Okay, this looks very nice. 1, 2, 3, 4, 5 for wave A. Wave B could have bottomed already, but we can go as low as about 4250. Okay, somewhere around there. Again, we go below today's low, then we are continuously subdividing, and this 5 waves higher is then a C wave or something more ugly, but to me it doesn't look to be the case. Once we have completed wave B, breakout above today's high, I'm going to look for 4310, 4340 ideally. Okay, with as you can see here, about 4330 ideal for, and then 5 lower, 4220, 4260. Somewhere around there. Allow me to adjust that a little bit. Sorry, this should not be 4230, somewhere around there. 4230 to about 4200. And that is definitely lower than initially anticipated, but this we anticipated almost a month ago, and we adjust accordingly. But nothing out of the ordinary yet. And as you can see, that's the 5-minute chart, 5 waves up. So far, it looks like 3 waves lower. Anyway, as you can see, we've not even completed 5 waves low. We've not even completed 3 waves lower. So this wave count is definitely possible. But I cannot yet say if this is valid. Okay. So far, so good, I would say. 1, 2, 1, 2, 1, 2, 3, 4, 3, 4. Okay, we're now in this green wave 4, which is, of course, equal to this gray wave 4, and then a 5. Okay, and then a 5. But that would then only complete wave 3. We haven't broken below any of these critical levels. If we start breaking again below 4185, and then definitely go below 4000 as shown here, 3, 4, 5, then we have wave 1 of the blue wave C complete. We'll get a big bounce back, probably back to about 4400 for wave 2, and then 3 happens. Okay, so we're still very early if this is indeed the case, and I cannot yet discern between this wave count and, of course, this wave count. Okay, I need to see 5 waves, but we're tracking it. This is our primary alternative in the case the wheels really come off. From a long-term perspective, you know, if you have a long-term holdings and stuff, you have to take the appropriate measures, what you want to decide to do. Remember, this is still not corrective, not impulsive looking yet to me to the upside from the October lows. Even a wave 5 back to about 4800 is still part of a potential corrective wave as shown. The whole idea is, how do you interpret this price action here from October to March? Do you interpret this as 1, A, B, C, 2, right? Or do you interpret it like this, A, B, C, B, etc.? Okay. Again, bottom line is we don't even have 5 waves lower. So hold your horses. We're not there yet. Absolutely not. If we do see 5 waves lower, then the wave 2 still needs to come. Okay. So there's still plenty of opportunity left. From a shorter term perspective, this is the hourly chart of this potential impulse lower. This is what we're going to look for, A, B, C. Around the same target zone, of course, as for this wave count for the gray wave 4. And this is simply 1 degree higher. Green wave 4, wave 5 here, and then a 4 back, and another 5 again to about 4,066, right? Somewhere around there. Matches quite nicely for this wave 5. Okay, at the 176.4% extension. But I think based on the 5-minute chart, I know it's not my preferred go-to chart, but this looks as nice and clean impulse as impulse can be, that we're going to see a bounce for this wave 4 that I've been looking for quite a while. The very alternative is that we have already bottomed for this red wave 4. But I need to see 5 waves up first to about 43.80 to even start to consider this. This is a simple alternative. Okay, they had a very brief wave 4. It is possible to count it this way. There are technically enough waves in place. So this is our alternative. Our preferred wave count is for a bounce, be it either gray wave 4 and then gray wave 5, or for, of course, green wave 4, green wave 5, but then we need to see another 4-5 sequence. Okay, so once we've completed this green 4, green 5, which is akin to gray 4, gray 5, remember that's then 3 larger waves, lower A, B, C, and then the market can decide if that was indeed an ABC or if it's going to morph into 5 waves lower. So that is the S&P 500. Here is the NASDAQ100. The ideal wave 4 target zone is here in red. We reached it today. Remember, we've always looked for about 14,435-ish. So today we got 14,432. Bingo, my name is Bingo. We reached it. Nothing out of the ordinary at all. Clearly not 5 waves lower just yet from the July high. Not at all. So already thinking that the top is in is premature. We need to see 5 waves lower. That is the objective way to go. And then it is prudent to sell into the bounce, which will be a second wave, because the third wave of the C wave will be pretty devastating. Again, we have not even moved below the key level here, 12,900, somewhere around there. We've just reached the ideal wave 4 target zone. Nothing out of the ordinary. All we got was these wave extensions. Remember, the wave 2 topped pretty exactly where it had to. Then the wave 3 is now deciding to subdivide and extend. So in blue are then the slightly revised 4-5 target zones. The CSA relationship targets 14,200, right smack in the middle. You can always extend, again, 13,900 is not out of the ordinary, and then a simple 5s1 relationship gets us to the 200%, okay, which is 16,000 somewhere. So far it's still following along a smaller micro 5. We should have completed grade 3, now 4 and then 5. Similar for the NASDAQ, I tweeted this morning. It's still following a nice impulse pattern where I can count and account for all the waves. All right, gray 1, gray 2, orange 1, orange 2. That's an update. Blue 1, blue 2. You can't see it on the closing prices, 3-4, 3-4. Okay, if I would do closing prices, which is a very neat method, you see exactly what I'm talking about. Okay. I'm going to zoom in a little bit, somewhere around here. Let's do the last 6 months. Zoom in a little bit. You can really see the waves nicely. This is 1, A, B, C, 4, 2. Okay. 1, and a little bit higher is 2. And then here is 3, here is 4. And then this is, of course, we can subdivide. This is then 5. Picture perfect. Okay. So far, so good. Nothing out of the ordinary. I like it. Looks good to me. And we've now reached a, I would say, extended third wave target zone with a nice intraday bullish reversal. So the blue zones are the extended target zones. The gray zones are the typical target zones, but the market decided to subdivide. Then we're going to apply a simple CSA relationship and see if we can reach some normality here. And as you can see here, CSA exactly in the extended. Picture perfect. So for now, we're going to content ourselves with, are we going to see 3 waves lower, or are we going to see, of course, 5 waves lower on the bigger time frame? So primary preferred wave count, wave 3 has completed. We're in wave 4 to the target zone, A, B, C. B could already have completed, doesn't have to be. And now in wave C or B is going to get a little bit more complex. But even this one on the 5-minute chart looks pretty good from a impulse perspective. Okay, let me go here to there. Impulse perspective. 1, 2, 3, 4, 5. Loud and clear. 1, 2, 3, 4, 5. I like it. Okay, that looks pretty good to me. So expect a bounce into the target zone and then a lower. CSA, again, now targets almost exactly the lower end of the ideal wave 5 target zone. Alternatively, same here with completed wave B, 1, 2, 3, 4, 5. We have not completed 5 waves lower. Bears, please hold your horses. We must see 5 waves lower. And then from there, we should see a bounce back. Okay. And the market will decide based on the information we'll get to, I would say, somewhere around here. Let's say we're going to bottom right there. Okay. And then, of course, we should see somewhere like this. Then we get a wave 2 to about there, right? Something like that. This is then going to be your wave 2. Somewhere there. And this is what you want to avoid, because this is then, of course, going to be your wave 3. Okay. But we're far away from confirming that we have topped. I need to see 5 waves low. That is the only objective way. We're not going to front run. We're not going to go, oh, no chicken littles, hold your horses. Not there yet. Okay. If so, plenty of time to resell into this wave 2 for longer term traders. Shorter term traders should just go in and out the markets much quicker. I couldn't care less about the bigger picture. So B wave then completed. If that is the case, then we're in 3 of 3, as I showed you here, right? We're in 3 of 3 completed. We're now in 4, target zone 5. Again, I cannot discern between 4 of 3 or 4 of C. Okay, but I still think we should see a decent bounce and then a lower low, which will help set up even more positive divergence on, at a minimum, the MACD. We already have it on the money flow, but I also want to see it on the MACD and actually also on the RSI 14, which I believe hasn't recorded it just yet. Okay, the RSI 5 is better for wave counting. The RSI 14 is better for technical analysis. So we could have bottomed already for wave B. Can certainly go a little bit lower, 14,500. See, this is the preferred primary path. Now, bigger picture-wise, why do we have to consider that we have topped already? Well, that is based in part on this oil Dow Jones relationship, besides many other indicators, which shows about 10 years lag time between oil prices and the Dow Jones. Okay. Now, this is done by McClellan. It's fantastic work, and it's been valid for almost 100 years. So this is a very important correlation. Now, 10 years doesn't mean 10 years on the dot. All right, it can be plus or minus 6 months or even almost a year. Now, originally, Tom had a top here around April 2021, 2011, plus or minus 10. But this is on closing prices. And if we look at absolute prices, we can see oil topped in early 2012. 10 years later brings us to early 2022. Correct. That is pretty much when we topped. All right, January 2022. That is when we have topped. We've still not exceeded that top. Since then, it's been all been, right? That's pretty much what we've seen, bounces and all that stuff. So now we should be here. So we've completed, I would say, the first impulse lower, right? We're about here, and it's going to kind of be messy for quite a while before we see the third wave, right? And this is all part of that second wave. We still need to see a lower low, right? So 1, 2, something like A, B, C, I would say. So this is like 1, A, B, C, and then etc. All right. So this is the bigger picture wise. Then we won't bottom until 2026, and 2014 clearly is a panic year. Okay. It could match because then this blue wave B has indeed topped. Okay. There. Oh. Then we have indeed topped, but I still need to first see 5 waves lower, and I haven't seen it yet. 3, 4, 5, 4, 5. Please note this advance since the October low does not look like an impulse, but has to be corrective. I have an ABC here because we can still subdivide AB and then ABC, for example, of some sort of large diagonal type of B wave, as we saw in 2019 into early 2020, just before the coronavirus crash. I think I have it here. Something similar like this. This was a large B wave, and then we're currently somewhere here on, as you can see here, A, B, C, something like that. Okay, see that? Looks kind of similar-ish. So this is then the October into March rally, right? There, decline to there. Okay, we rally. Okay, we rally, drop. So we rally the drop, and then we get the last boost. And again, a diagonal B wave can become irregular, making a new all-time high. We've seen it many times before. So anyway, so why did I mention 2024 as a panic year? Well, one of the things is Gan. Gan is a market timer, and he's forecasted market highs and lows pretty well since the 1930s. So, for example, 2009 was extremely low stock prices, correct. 2020 was a panic year, correct. All right. 2021 were supposedly low stock prices, incorrect. 2019, high stock prices, correct. 2015, panic year, correct. 2016, low stock prices, correct. 2013, high stock prices. I think that was also correct. So there's a lot of things that I would say, you know, if you're correct 80% of the time, you better listen, right? So we had, of course, a market top, I believe, somewhere 2014-ish. Then, of course, we got the 15-16 scare. I believe we bottomed in February 2016. Yeah, those were low stock prices. We had the panic year here just before in somewhere in the summer of 2015, end of August. So that is all correct. And then, of course, we rallied into 2018. 2019, we bottomed in December. Also there, we had, of course, first high stock prices up to that part. And then, of course, we rallied. So it looks pretty good. So this forecast, maybe hard to see, low panic crash in 2024. So stocks are in a row. That's our bigger picture. This is then the semiconductors. The semiconductors didn't do much over the last several days, just marginal lower lows. Looks like an ending diagonal with 5 in gray of 3, 1, 2, 3, 4, 5, and should now be in this green wave 4. Nothing out of the ordinary yet. It's just impossible to nail exactly every single low and every single high on these few hours. So we always take a look at the little bit broader theme here, which is a 3, a 4, and a 5. As you can see here, the ideal wave 5 target zone for red 3/C is 32.15, 32.60. Okay, and the CSA relationship targets 32.37. So it's pretty good. I like it. Nothing too bad. So I think we should be in this green wave 4. Also here, plenty of positive divergence, as you can see. So we should see some continuation for this green wave 4. At some point, we simply run out of waves to count to the downside, and this looks pretty good to me. 1, 2, 3, 4. I like it. IWM getting also very close to its ideal 174 target zone. I've drawn this blue trend line, which is pretty much based on open or / closing prices. Open price, okay? Open price, closing price. And we can even extend that one a little bit further, as you can see here, right there. And we nailed it, all right? We nailed it. So positive divergence here as well on the RSI 5. Positive divergence on the MACD histogram, not yet on the MACD itself. positive divergence on money flow. So we've gone lower compared to August, but less money has been flowing out. Okay, so this is on the verge of bottoming, I would say. We might see one step lower, 1, 2, 3, 4, 5. But again, if we start breaking above, I would say 182, then the odds really increase. We see this wave E of a triangular B wave, A, B, C, D, E. Let's move to seasonality. Seasonality has been working pretty well. Ideally, we were looking here for a top somewhere around September 6th to 8th. Top September 1st, not too bad, honestly. And have been declining pretty much since, with some bounces along the way. Now look here, September 26th, and then we should see a bottom September 27th, a rally into tomorrow, lower into the end of the week, because the week ends here on the 29th, and then we bounce and make a marginal lower low. So this would work reasonably well, okay? Reasonably well. This lower low on seasonality doesn't necessarily mean we have a lower low in the stock market, okay? It's about direction, not about the absolute. So this is for the S&P 500. Looks pretty good. For the Dow Jones, we have even more data available, 126 years instead of 95. And we see the same here. Okay, we should bottom here, 27th. A little bit of a bounce, 28th. That could be that wave 4. Then we go wave 5, and then we'll see if we start to get our rally to 4,800 underway, or if we indeed see only a larger 4th wave and a larger 5th wave for the impulse lower into late October. To be determined, okay? If we do that, then indeed the 2nd wave will last for a couple of months. Again, this is just about the market direction of the absolute terms before the 3rd wave starts, which, as you can see here, can bring us all the way into the summer of 2024. So then we see the 3, the 4, and the 5, and then we flubber around for this wave 2 for several months. 1, 2, 3, 4, 5, 6, 7. Absolutely possible. Okay? Absolutely possible for having such a long 2nd wave to wrong foot everybody before the lights go out. All right, so seasonality is back on track. We should see a bounce, ideally tomorrow, maybe Friday, to be determined, somewhere around there. Let's have a look at market breadth real quick. Okay, look here, we were looking for this positive divergence to develop. We have it now. Okay, so the market has made a lower low on improved market breadth, right? You see that? So we've made a lower low on improved market breadth. This is often a very good signal that we're getting very close to a bottom. If not, the bottom might already be in, as I showed you. That is now our alternative. Okay, you see that? The market has made a lower low. There, let me get the right lower low in price, but a higher low in market breadth. So bears, hold your horses. We saw that here in October. We saw that here, okay, as well in September. We saw that here in June. We saw it here in January. If anything, it can just be a decent bounce, but it starts to look pretty good. So as such, the summation index is of course still on a sell, but the ebb and flows of the market must be recognized that we're still ebbing and we haven't really flooded yet. So we're getting also here close to the end, I would say 1, 2, and you can really see, so this is 1, A, B, C for 2, 1, 2, 3, 4, 5. So it's logical to assume another 4, another 5. And that's it. I like it. I really like it, how well the closing prices telegraph the waves. Doesn't work all the time, but nothing works all the time in the markets. Last but not least, this is the PMO buy all, sell all indicator. No data for today just yet, but this one is of course really bottoming out. I've pointed it out before. Once this one really goes flatline, start looking for a good buy signal, right? This one failed, it happens. Again, nothing works all the time. This was a failed buy signal. This was a very nice buy signal. This was a very nice buy signal. This was a failed buy signal, but we didn't go from the ideal path. So we're just going to look at the ideal paths, meaning from the ideal bottoming zone, okay? And everything else is then just secondary. That's the golden nugget from the bottoming zone. This one here failed, of course. It happens. And this one failed. But good good, 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 not so good. So it doesn't work all the time, but we have to acknowledge that we're getting close to a bottom, be it either for a few days for a bounce or for a longer term rally to S&P 4800. Okay, just to recap, preferred path is for lower. 4270 has been breached, so we're going to look lower ultimately for the low 4200s for this wave 4. As long as we stay above 4185, I would say, as you can see here, this wave 1, we're good. And the alternative, of course, is that we have topped and we're in a much larger impulse lower to the low 4000s. Cannot discern which of the two is yet because we're still impulsing lower, and impulse is part of a C wave as well as a third wave. I cannot discern between the two. We'll know soon enough. Okay, market breadth is improving. Please be aware and cognizant of this positive divergence. It can need a little bit longer, as you can see here in September, October. Then we have double divergence, just like we saw here. So you get a bounce, lower low, and then we take. If we see that, hold your horses. That's going to be a rocket ship. All right, that's all I have for today. Take care, trade safe, and I'll catch you all on Friday.